Hi everyone. So today is our second session, second video after our first live video, which is about different types of crypto traders and crypto trading mindset. I think it's an important topic to discuss and talk about as what type of risk appetite people have when they are doing crypto, and you need to identify that what type of crypto trading or crypto investor you are, because if you don't know who you are, then you cannot make decisions properly, and as much as it applies to real life, it applies to crypto as well. So I wanted to discuss this topic with you today, and as always, if you have questions, feel free to ask. I'll be more than happy to respond. So first of all, the introduction. I've taken a bit of notes. So if you see me looking down, it's just that I'm looking at the notes because I go live and talk about it. Sometimes I forget to talk about something, so I just wrote bullet points for it. Okay, so crypto traders. Okay, there are generally 4 or 5 types of crypto traders. Okay, I'll talk about the easy ones first. So you have hodlers, those who hodl. They buy crypto and they only collect. Okay, they never sell, and they want to hold these projects, whether it is altcoins, whether it is Bitcoin. They only collect whenever it dips, it goes low. They buy and they save. A good example of it is Michael Saylor. If you know about Michael Saylor, he's a hodler for his personal bags as well as for his company that is called MicroStrategy. So he is only hodling, and I don't think he's trading it at all. The other type of crypto people, traders, if I want to say, are day traders. Day traders are the people who want to trade on daily basis by taking a lot of trades. Usually their trades are small trades. So they would look for a particular pattern. I mean, something that I'm going to teach later on in the videos as well. You look at the different timestamps. So you have different timestamps of candles, and whatever timestamp you are looking at, whatever you see in the chart would result in that time frame. So if you're looking at 3 minutes candles, you're looking for a very short trade. If you're looking at 5 minutes candles, 15 minutes candles, you're looking for short trades that would last maybe 1 or 2 hours or maybe 4 hours. You're not looking at 1 week's position, right? So that is day trading. These people generally get in, so they go in quickly and they get out quickly, but they can spend hours in it. So that's your day trader. Second are the scalpers. Scalpers are the people who basically get in and get out very quickly, usually within minutes. They are not looking for big gains, they're looking for small gains. And what they do is that they use leverage, which is called margin trading, future trading. What else we have there? Margin, future, and leverage. Yeah, these are the three terms that are generally used in the market. Sorry, for these type of traders. So if you are scalping, unless you have a very big bag, you cannot make good amount of profit in scalping on spot. Spot is the opposite of leverage. If you don't understand spot and leverage, let me know. I can make a separate video on it, but I don't want to get into detail of everything. The third type is swing traders. Swing traders are generally the people who like to trade on the basis of days or weeks. So what they would do is that, like a good example of a swing trader would be a person who purchased Bitcoin early in the beginning of March, and now when it reached $31,000, they would sell it. So it's a very big swing, and they are not going to continuously look at the charts. They will not be so much worried about it on perpetual basis, and they do swing trades on the basis of strong information, because the longer this amount of time you spend with the trade, the more risky it gets, because there are all kinds of news, economic news, whether it's related to um, rises in interest rate or increase in unemployment, or some other bad news or good news can come in, and it can affect your swing trade. So whenever you're taking a swing trade, it is generally based on a lot of information. You need to know that when I enter in this trade on 1st of March, and I'm planning to get out on in like 2 weeks, what events are supposed to happen, and you should know how these events will turn out to. So there is a meeting called FOMC. Usually it has a good impact on crypto market. At least that's what we are seeing in 2023. So if there is a FOMC meeting coming up, and there's a huge possibility of it being a bad news. I mean, there are indicators out there. I will not discuss about those here. But if you have a probability even of 50-50 that it can go bad, and you take a swing trade, pretty much you are taking a huge risk that even though everything that you calculated about that swing trade was accurate, but as there is this possibility of news, it can go against you and it can disrupt the whole plan that you had. Uh, okay, hodlers, scalpers, swing traders, and day traders. Yeah, and then there are position traders, which are longer than swing traders. Their timeline is usually longer. So a position trader would be someone who entered into the market when Bitcoin was around $19,000. So we are talking about maybe early January or December, and they are holding on to it and expecting Bitcoin to go to $35,000, okay, above its current market price. So they would wait and hold, and usually what they do is that they sell and sell their positions as it goes up. It's called trail selling. I'll keep it for a different video, but what they do is that they reduce their risk. So $30,000 is a good point to sell a good position of yours. So you can sell 50-60% of your purchase. And then what happens is that if it goes up, you can sell the remaining 40% of it and take more profit that you always wanted. But of course, you're reducing your risk as well. So that's position trading. So these are the different types of traders that are out there. And it's really important for you to understand which type of a trader you are, because people get into crypto, forex, or whatever, and they are not clear about what type of a person they are. They don't know if they are hodlers, they don't know if they are scalpers, they don't know should they do day trading, swing trading, intraday trading, position trading, and they take a little bit of this, a little bit of that, and they basically destroy their portfolio just by picking random things. If you don't have clarity and you're trying to try everything, it's not going to work out for you. Being consistent in crypto is extremely important, and having a strategy is a must. If you don't have a strategy, it's not going to work out for you. And also, it depends on two other things. One is time, and other is money. How much time you have and how much money you have. How much funds can you invest in it? Like if you have $1 million, I would think it would make more sense if you're doing position trading or you are doing hodling, right? If you have like $100, I don't think position trading is good for you unless you don't have any time at all, right? So you really need to see how much funds you have, and at the same time, you need to make sure that how much time you have. So if you are a person who is young and is only getting education, or their jobs have flexibility, or you are a freelancer, or you have your own business and you know that you have time, then maybe you can do day trading, and you can call it like a full-time job and you can stick to it. So you really need to identify who you are, and that's the whole purpose of making this video, because people don't take it seriously, and I see people confused uh, everywhere, including in my community. They are always looking for something. They enter into a trade, they buy a crypto project without any exit plan. And how can you have an exit plan if you don't know what you're doing, right? If you don't know you are a scalper, I mean, and you're taking a position trade, then you're pretty much getting into a very, very bad position. There's this friend of mine, he usually makes a lot of losses on trades, and it's usually because of the fact he uses stop loss. and he's not clear on what kind of a trader he is. And what happens is that as a result, his stop loss gets hit. It's not that he's not in profit. So generally what happens is that he's in profit, but as he's not clear that what type of a trader he is, if he's a scalper, he will take small amount of profit and leave, right? If he is a swing trader, he would know where he wants to get out. If he's a day trader, he would know as well, right? As a day trader, you want to take multiple trades. So what you would do is you would use small amount of funds and take multiple trades. But if you're a hodler, you would stick hardly to 2, 3 projects maximum. No one hodls 15 coins, 20 coins, and if they do, they're very stupid or they're very, very rich. So that's for the crypto traders and types of crypto traders. The second and the last part of today's video is related to crypto trading mindset, which basically relates to your risk appetite and knowing what type of a person you are. You need to understand that if you're getting into financial market, whether it is crypto, whether it is stocks, whether it's forex, I would say even land and property, if you talk about it, there is a certain amount of risk involved, and you should be clear about the fact that what type of risk taker you are. There are generally 3 types of people out there. It's called risk averse, risk moderate, and risk seeker. Risk seeker is a person who likes to take big amount of risk. Why? Because their philosophy is high risk, high return, which is true. But people always focus on the high return and they forget about the high risk. So if you are a risk seeker, you should be very clear about it. You should know it to your heart, because when it goes against you, it can affect you psychologically very badly. And this is something that I see it perpetually with a lot of people in crypto space. People make 5 good trades and they think they are God, and they're very excited, overconfident, and everything. But the moment they make one big loss, they think that they're very stupid and nothing is working out for them and everything is against them. Why? Because they don't know what type of a person they are. They don't have a clear strategy and they let their emotions come into the game. You need to understand that if you are not clear about who you are, like I told you about the type of crypto traders, if you don't know what type of a trader you are or investor you are, and you don't know your risk appetite as how much risk you can actually afford without affecting you emotionally. There was a quotation by, I forgot the person name, but I love that quotation. He says that if you have taken a crypto trade, he doesn't talk about crypto trade, he talks about trade in general. I think he was referring to stocks. He says that if you have taken a crypto trade, um, and that and that trade appears in your face when you're talking to someone, it means that you have taken a trade larger than you should have. And it is extremely true. I have seen this. I mean, forget about others. In my early beginning journey of crypto, I used to get angry. I used to be emotional, upset, depressed, because I used to take a trade position that was larger than I should have. And this is something that seriously affects you when you don't know what is your risk appetite. So for example, I have let's make an example. I have $50,000, right? And what I do is that I'm very stupid. Even though I'm risk averse, I don't like to take huge amount of risk. But still, what I do is that, sorry, I invest all of my $50,000 in this one crypto trade. And yes, the possibility is really high. The probability and everything that I have decided about it is correct. But still, things can go wrong. No one is perfect, right? And the moment that that trade goes against me, I will be sour, angry, and upset. And when people are talking to me, they could see it in my face, they could see it in my reaction. They wouldn't know what is going on because I haven't told them what I'm doing, right? But they would feel it. And this is something that you don't want to do. This is why it is important to identify either you are a risk averse, a person who doesn't like to take a lot of risk, and there is nothing good or bad about it, okay? This is something that you need to understand, that there's no good or bad. There's always there is always a strategy in place, and everyone is different. We all humans are different, and we all have our own way of living and making decisions. But it's important to identify who you are, right? So you should know if you are a risk averse. Risk moderate means you're okay with medium amount of risk, and risk seeker means you are okay with huge amount of risk. I'm a risk seeker. I'm very clear about it, and that's why I have managed my emotions around it. Because when you're a risk seeker, you are pretty much running into very very dangerous decisions, and things can go south on you, and it can pretty much destroy you. But again, it depends what kind of a person you are. Okay, I see a comment here from Facebook. What's your channel name? Um, so the channel name is, again, my name is Shah Faisal Shah. And if you are not able to find me on YouTube easily, search for Life of a Pawn, Pawn. And then if you scroll down, you will see a channel saying Shah Faisal Shah, and you will see my face there with not so much beard. And that's my channel. Usually I'm in the top 3, 4 videos, or top 7 videos. I mean, it changes, but I do rank for that video. Anyway, so that's my channel, and these videos that you are seeing, they are on in the section of live. They're not under the general videos because I decided to do lives instead of recording them. It's much easier for me, and I can do it more regularly. Okay, so that's the second part of the topic, which is basically the last part. Okay, so we discussed types of crypto traders, and we talked about crypto trading mindset. And the last thing that I want to discuss is the risk management, which I already covered in the types of risk that people like to take, the type of risk seekers or risk averse or risk moderate people are. But still, risk management is extremely important. It's basically capital management. The funds that you have in crypto, stocks, forex, wherever you have your investing funds, it is extremely important for you to ensure that nothing happens to them. This is your hard-earned money. I'm sure you have earned it outside. Even if you have not earned it outside, you are a day trader. You're earning it through investing time, making decisions, and it's a lot of headache. It's not easy. Crypto or any financial markets are not easy. If someone is telling you it is get rich um, quick scheme, they are lying about it. It takes time and effort, and you need to have a strategy, and you need to do it on continuous regular basis to be successful in it. If you take a trade or you bought a crypto and you got lucky with it, that's not an investor. That's just gambling. You can gamble and make money. Okay, an investor is a person who is always active in the market, throughout the market for years, and they're perpetually successful. Their losses are less and their profits are more. Of course, you're going to incur losses, and that's why you need to ensure that you control your capital. You always need to ensure that what you lose is out of your profits and is never out of your capital. Of course, in the beginning, it's really tough when you're growing from your capital. You want to make some profits. And of course, we all wish to be profitable at least in the beginning. So we collect some profits, and then it doesn't come down and attacks our initial investment, as they call it. But it is extremely important. And this is basically all of this is part of crypto trading and crypto investing. So if you have any other questions, let me know. I think I'm pretty much done with this topic for today. And again, I have said this, don't take this lightly. If you skip through the fundamentals of how you should behave in investing atmosphere, you are in financial markets. There are bankers out there against you. There are institutions against you. And they are not kids. They will come for you and take the money from you. It's basically a very, very dangerous market out there. And if you don't know what you're doing, if you don't have a strategy and a plan in place, that's how people lose funds. Yes, there's someone is saying, I have a question. Please feel free to post your question. I'll respond. Okay. I still won't be able to find your channel. Please share a link here. Thanks. Okay, you're still not able to find the channel. Okay, then you want me to comment? Ah, okay, I can comment actually. Hmm. Let me see if I can give it to you. So now I'm going to share the link to the channel here. Oh, it's private chat. No, not private chat. Post a comment. Okay. Okay, it says can't post on some destinations, so I don't know. Let me know if, okay, it has posted the link in YouTube and Facebook. Okay, it's there. Okay, we have a second comment, a question. After using some indicators, I can see entry points, but I don't know what should be my target or take profit points. That's the whole point. If you don't identify what you're doing, if you're a scalper, you're looking for 1%, 2%, or even less than 1% kind of profit. You're looking for 0.5% or even less. Scalpers always use leverage to get good amount of gains. So if it is, let me explain it to you how scalping with leverage works, if you don't know already. So if the trade has 1% profit, which for scalpers is a lot, and it's easy to catch because market is always moving 0.5% or 1/4% up and down in altcoins and Bitcoin. So let's use 1% as an example, then it's easy to explain. Okay, so for example, there is 1% move in the crypto, okay, which is on spot. But you have taken a leverage of 20, which means that this 1% is multiplied by 20, and that's 20%. So if you were using $1,000, just because of this 1% move, you have made $200, and you will close your trade and you will get out. But if you are not a scalper and you are a position trader, then you are talking about months of wait to get into a position and just sit there. Like those who took position, like I explained already in the video, in the beginning of January or in December, they're still chilling out and sitting with that trade. And then you're not so much bothered with, it going up and it coming down. Because those who don't know who they are, what happens to them is that they're in profit. They see, oh, $200 profit, $100 profit, and then next day they wake up, or maybe after a few hours they see, oh, it dipped, and now they're in $500 loss, and they're upset and angry, and they get emotional that, oh, I'm getting into loss, let me close this trade, it's going against me. And then they take loss and close it, and they didn't close it in profit. That's why I said that you need to have a clarity who you are, what kind of risk appetite you have. Because if you know what kind of risk you are willing to take, then you will know what type of a trader you are. And if you know that you are a risk seeker, let's say, for the sake of example, then it means you can use leverage trading as well, because you don't mind losing all of your money. So you can go and you can use leverage trading, maybe 2x, 5x, 20x. I mean, I have people in my group, in my Facebook group, who use 125x. I mean, I have never done that. But I mean, wow. Some people do that. And generally they are scalping, or they have a very clear indication at that point. But again, it's a gamble. 125x is very dangerous. But let's not get into that. So you need to know who you are, and your risk appetite will set that. Once you are clear on your risk appetite, what type of a person you are risk-wise, then you have to decide what type of a trader you are, or whether you are a trader or not. Okay. Once you have clarity on that, then you get into the market, and then you will have clarity on your exit plan too. And of course, I'm going to teach you how to identify your exit plans and entry plans. That's the whole point of me getting into making these videos, so I could tell you where to enter and where to leave. And then on the basis of type of trader you are, I will tell you that if you are a scalper, this is your strategy. If you are an intraday trader, this is your strategy. So it will be different for everyone. Okay, there's another question. Whenever I try to enter a trade as a scalper, the moment I exit, I am profitable, but have to bear the amount of fees. Also, there are some groups in the market who shared signals on daily basis. Would you recommend them? I I I I, I would recommend any signal seller. Okay, but you should know what you're doing. First, you need to have some kind of clarity. You should know what you're doing, and then go to the signal. But if you are starting out, I can see from your comments you don't know your exit strategy, which clearly shows that you're not very polished trader. I would say I would stick to first getting educated, okay, knowing the topic, and after that going for signals. Look, the whole point of signals, I don't like to call it signals, but let's say signals, okay? The whole point of signals is to save you time to search for the project. So, for example, I have a signal group. I'm just saying, okay? I post that A, B, C, D, these four cryptos are going to do this. I saved you time. There are 1,000 projects out there. I gave you these four names. I told you that according to me, this is the entry, this is the exit. Now you have saved yourself time. You will go and you will analyze what I have said, and you will make that trade according to you. And you will decide whether you want to take that kind of risk or not. Let me give you an example. So, for example, like I don't know what's current price of Bitcoin. So let's make an example. Let's assume right now Bitcoin is at 29,500. Okay, so we all know that if it falls down, the lower support. Okay, this is according to current scenario. If you're watching this video like a month later, don't come and hold me for it. It is a support as long as it doesn't break. Okay, so the current support is sitting at 29,200. Okay, so we know that if it goes down, it will bounce from there, which means that you can put your buy order at 29,200. So this is what I said. I'm a signal seller. This is what I told you. But you know that everyone has set this as the target. What you would do is that you will set it at 29,250 or 260. But at the same time, you need to put your stop loss, right? Risk management. You're using leverage, right? Risk management is there. You need to have your stop loss. So you cannot put your stop loss at 29,200. You need to go a bit down, just to make sure that if it goes for a deeper dive and it's searching for liquidity, it doesn't hit your stop loss. And even though it will actually go up and bounce, but just that because you had put a very tight stop loss, it got hit and you lost, right? So what you do is that 29,200 is what I said. 29,200 is what everyone is saying on YouTube. Let's say you would put it at 29,100 and you are buying it at 29,250. So there's a $150 gap. On spot, that doesn't make much difference, but in leverage, that's a crazy difference. And that is like, I don't know, I'm just making an example. Let's say it's a difference of 20%. So that's a 20% of loss. Imagine if it actually goes down for it and it touches your stop loss and maybe it goes even down further, or maybe it bounces back from it. You have lost 20% of funds on, and if it is $1,000 of margin, you're using $200 gone, just like that. And this is where your risk appetite and the type of trading helps. Risk appetite tells you whether you want to take this 20% of risk or not. So if I'm a risk averse, it doesn't matter if I lose trade, if I lose the opportunity. If I see that the signal is 29,200 and there is a possibility that it would go bounce back from 29,250, I'll still not adjust. I would say if it comes to the point where I want it, I'll take it. If it doesn't, I lost the opportunity, more opportunities will come and I'll go. That's the whole point of making a plan and sticking to it. It has happened to me. A recent case is of XRP. XRP, I missed it by 1 cent. And I didn't take it. Of course, as a human, you are angry. But I stood by my plan. Stuck to my strategy, even though if I had purchased it at a bit higher price, I would have made money on it because still went up. But at the end of the day, you need to make a plan and stick to it because one time it looks like that, okay, if you had done that, it would have been beneficial. But if you don't listen to your own strategy, if you don't stick to it, okay, and you start breaking it, then there is no point. Then you're pretty much gambling because you don't have a plan, you don't have a strategy, you have jumped into the water and you don't know what you're doing. Okay, I'll see. I like scalping and currently and learning future trades. I think to start with just $30, $50, and I may use 5x or 10x leverage. Don't use more than 2 or 3x. 5x and 10x is a lot. And instead of 30 and 50, yeah, $30, $50 fine. Yeah, practice with it. Do scalping, but get educated. That's what I would recommend. Okay, if there is any other question, I can wait half a minute before I go. Otherwise, we are pretty much done with today's topic. And you can ask these questions later on in YouTube as well. I would be more than happy to respond. In Facebook, it's a bit difficult. I don't know, when I click on that comment section, the video plays, and when I'm trying to scroll through it, I'm not able to see the comments. Okay, I think this is done. Thank you so much for all those who joined and those who are watching. Let's continue this journey, and I'm going to educate you with everything. Thanks to you as well. Take care.